Welcome to Cash Flow Guard. In this demo, I'll show you how you can clearly see where your money is going before it becomes a problem. When you open the sheet, you'll see two tabs, Start Here and Cash Flow. Start Here tab walks you through everything step by step. Basically, this tool solves two very common problems. You might get paid weekly or bi-weekly, but most of your bills are monthly and spread across different dates. Secondly, your bank only shows you what has already happened. This sheet shows you what your balance will look like in the future. Let's walk through it. We will jump into the Cash Flow tab here in the sheet. Step 1. Enter your bank details. Start by entering your bank name. For example, Bank of America. Then enter your current bank balance. Let's say $1,450 and the date of that balance. This step is important because everything else builds on top of this. Step 2, enter your income. Here you enter your income. You can name it anything, salary, freelance, extra. Let's say you earn $1,100 weekly and your next payment is coming this Friday. Once you enter that, the sheet automatically continues that income forward based on the frequency. Now let's add another income. For example, your spouse earns $1,200 bi-weekly. Again, you enter the start date and the system handles the rest. That sets you up for the income. You can add other sources of income or one-time payments you are aware of in here. If not, we continue and move to our next step. Step 3, enter your expenses. Now we move to expenses. This is where you enter everything that eventually leaves your bank account. One important thing to keep in mind, you only enter payments that actually hit your bank. So for example, if you're using a credit card for groceries or daily spending, you don't enter those individual expenses here. You only enter the credit card payment when that total amount is due and hits your account. So let's add a few common ones. Rent, $2,800 monthly, due on the 8th. Car payment, $500, due on the 18th. Second car payment, $300, due on the 25th. Insurance, about $250. This covers both cars and rental. Monthly, due on the 15th. And finally, utilities, around $300. Monthly, hits your account on the 6th. And then your credit card, let's say $3,000 monthly, due on the 21st. Now, this one is important because this usually includes a lot of your day-to-day spending. So instead of tracking every small expense, you just track when the total hits your bank. Step 4, let the system do the work. Once you've entered everything, you move over to the cash flow projection section. This is where everything comes together. The sheet automatically builds your future cash flow. So now you can actually see your bank balance day by day. Into the future, anytime there's a change, whether money is coming in or going out, you'll see a new entry show up here with the date, the change, and your updated balance. And this keeps going for up to the next 1 year based on the income and expenses you've entered. So instead of guessing, you can clearly see where your balance is comfortable and exactly where things might get tight. And to make it even easier to spot, anytime your balance drops below $1,000, it gets highlighted in red so you can quickly catch those problem days. And the best part is, if anything changes, you just update your income or expenses and the projections adjust automatically. At first glance, everything might look fine. Your income is higher than your expenses, so you would expect everything to be okay. But then you come over to the projections and you notice something. On the 21st, when the credit card payment hits, your balance drops sharply, and in this case, it actually goes negative. And this is exactly the kind of problem this tool helps you catch, because without this, you would never see it coming. Fifth and final step, fix the problem before it happens. Now that you can see the issue ahead of time, you have options. You can reduce spending before that date or increase income by working some extra hours, or even temporarily adjust your cash flow. For example, you could add a one-time income. Maybe you borrow $1,000 from a friend just before the 21st to avoid going negative, and then pay it back later once your balance recovers that anytime after June 21st. You can add that repayment as an expense and immediately see how your projections adjust and confirm that you're still in a safe range. With that one small change, you can make sure your account always has enough to cover all the payments hitting your bank. The key point is you're no longer reacting, you're planning ahead. Final takeaway. That's what Cash Flow Guard is all about. No guessing, no surprises, just a clear view of your money before things go wrong. Once you set it up, it only takes a few minutes to update, and it gives you complete control over your cash flow. Give it a try and see your money before it happens.